Trading the News with Wayne McDonell. You're watching the MoneyShow.com video network. Hi, Wayne.
Hi.
How do you trade the news? We get just an enormous amount of information shoveled at us every day.
Yes. Yes, trading the news is wonderful because there are two different ways to trade the news. There's fundamentally, you can trade the news based on long-term trends, or technically, the other thing that I do is I'll trade short-term movements. And so, fundamentally, we all have a chance to read economic reports. They come out on a regular basis. They're scheduled on a calendar. We know well in advance when PPI is coming out and CPI and GDP and all these reports.
Parsed ad nauseum, right?
Well, but they're important because central bankers are reviewing these reports. Is there inflation in the economy? Yes or no? Do they need to raise interest rates or lower interest rates? And this is very, very important. If they're raising interest rates, and it's not just the Fed, it could be, let's say, the Royal Bank of Australia. If they're raising interest rates, that tends to raise the value of the currency. So this is very, very important for a long-term investor because central banking policy doesn't change minute by minute. Central banking policy tends to last for many, many months and even several years. And so because it's so predictable, you just have to read this and review the same news that the central bankers are reading. And so read the news. Is there inflation? Yes or no, and if there is, how will a central banker respond with policy? And if your decision or hypothesis is that they will raise interest rates to combat inflation, then the result of that is probably a higher currency. Now, short term, news can come out and it could be shocking. Non-farm payrolls can come out and we've lost more jobs than we expected, and the market could really take off one way or the other because it could be a game changer. And for a couple of hours, you could have a lot of volatility. Well, that may agree with my long-term fundamental analysis, but it may not. And therefore, I can trade on the short-term charts using technical analysis the market's response to this surprise. And so sometimes a short-term rally for the 2 or 3 hours could be created, or even 2 or 3 days. And I can use technical analysis to jump in on that trade and make a short-term profit, even if it disagrees with my long-term analysis based on fundamentals.
So you can have trading opportunities within a long-term trend.
Yes. Well, and the wonderful thing about a long-term trend, let's say a long-term uptrend, a trend, an uptrend is simply higher highs and higher lows, and a higher high and a higher low, and a higher high and a higher low on a chart. So in that case, what I'm trying to do is I'm trying to buy the dips. I'm trying to buy low because I don't want to buy high, even if the market's going up. I don't like buying high. I want a better deal, so I look to buy low. And so whether it's technicals or fundamentals, that's always my goal.
Wayne, thank you.
My pleasure.
My guest has been Wayne McDonell.